Friday, January 19th, 2018, Monaco 64, home of alternative economics and contrarian views. It's almost quarter to 2 a.m. Eastern Standard Time in the U.S. This is an early market update. I'm going to focus on the bond market, the Treasury note future, and also some of the news that's coming out about Congress. The fact that it's going towards a shutdown because they can't seem to agree on how to fund the government. So let's start with the markets this morning. Spot gold has rebounded. It's up $6 at $13.33. This is pretty much the high overnight. Silver at 17.05, up 10. The Dow is down 93 points at 25,925. Yesterday, the Dow was down 98 points, or 97.84 points. So stock market coming a little bit under pressure. S&P down 6 at 27.92, and the Nasdaq down 11. Dollar is still very fairly weak. We're at 90.30 in the dollar index. Yesterday we touched a low of 90.11, so that 91 level, we've gone up there the last few days to that 91 level, which is key resistance now. It used to be important support, and the dollar doesn't seem to be able to get back above that level, which is not surprising. What else is going on? Crude oil 63.04, down 1.3%. Cryptocurrencies have stabilized a little bit since that big drop we saw a few days ago. Bitcoin 11,500, Ethereum 1,038 right now, EOS $10.73, Ripple 162.70. And yeah, so a little more stability there in the cryptocurrencies. Are we out of the woods yet? We'll have to see. It could be that we are, but we could also correct further down, but not, in my opinion, any sign of the end of the new technology. So what else is going on that I noticed yesterday is that very important that the 10-year Treasury yield is now moved up to that all-important 2.63 yield that I've talked about many times. That's been the recent high in the last, I would say, 2 years. And I'll put links above in the cards to the previous videos I talked about, or you can just Google on my YouTube channel, bond market, bond bull market, or bond market, and you find loads of videos that I talked about. As I speak this morning, we're at 2.63. The high yield has been 2.6367. So the market knows that it's an important level. And I think we are at a point where we could see bond weakness, or, lower prices in bonds, higher yields, because bond markets yields move inversely to price, and we could continue to see weakness in the stock market, which the last few years or even more, usually when you have weakness in the stock market, people rush to U.S. Treasuries. But now it seems to be going the same way, which is not a good signal. That's what happened. That's what used to happen in the past, before the markets became manipulated by central bankers. I've got a chart here of the 10-year note future, and it's a continuation chart because every 3 months you get a new future in the 10 years. But this one I was able to go back all the way to 2010, and you can see how interesting this chart looks. And basis the future, we are already breaking very key supports here. I think it's only a matter of time now that the yield will go to 275. The key level is 3%. As I said many times before, if we break above 3%, that will break the 36-year trend of lower lows and lower highs in yields. So we're not there yet. If we close above 263 today, which is the end of the week, that will be not good for next week, I don't think. So as you can see here, we're breaking through these key supports in the 10-year future. It's around just below 123 here in the future. And right now we're at 122.12. That 12 is in 30 seconds, by the way. 122 and 12, 30 seconds. U.S. Treasuries are traded in 30 seconds, in fractions of 30 seconds, not decimals. What else? Yeah, this is something that I spoke about yesterday. The Chinese agency, the Gong, downgraded the United States. And one thing they said, which sounds really that, and now we're having an example of it. They said, and I quote, "Deficiencies in the current U.S. political ecology make it difficult for the efficient administration of the federal government. So the national economic development derails from the right track." And they'll go on to say massive tax cuts directly reduce federal government's source of debt payment. And it's funny that right now the big headlines are, and I take this one from Politico.com. I don't read that website, but I found the story, and it says Congress hurtles towards shutdown. The House passes a bill to keep the government funded for another 4 weeks, but prospects in the Senate look dim. So the Gong seems to know what's going on. S&P and Moody's not as much. They'll probably be behind the curve as usual. And this article says Congress is careening toward the first shutdown in more than 4 years, with Republicans and Democrats at a seemingly intractable impasse over government funding and the fates of young immigrants facing deportation. So here we have this problem seems to reoccur a lot. I know the last shutdown was 4 years ago. You know, you've got the debt ceiling problem, and but somehow they get a tax cut bill through that will make the deficit worse. It will increase the national debt, but when it comes to agreeing on a budget or keeping the government going, they can't even do that. So I'm not surprised that the dollar keeps going lower, and that things are not as good for treasuries. What else is going on? Well, there's another headline here on Zero Hedge saying, explosive, shocking, and alarming FISA memo set to rock D.C. and Mueller investigation. So politically, there's a lot of stuff going on. They are probably more likely to be distractions. And as I said before, we need to keep an eye on that 10-year yield. That, in my opinion, is what could be the most important thing. And that could mean that we do get big political distractions, but I wouldn't let myself be distracted by them. So as I leave here right now, spot gold, it's still just below 1333, silver 1705, Dow still down about 100 points. Been frustrating a little bit for gold and silver, but I think we will have a good end to the week. It's still early days. Excuse me. And yeah, keep an eye on the dollar index, and the 10-year yield. If you see that yield at 264, then you know that we're making new highs. I'll put a link to that chart below in the description of the video. So if you enjoyed this video, please like, share it, subscribe to my YouTube channel if you haven't. You can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.